presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ward. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a great Thanksgiving. It was a nice long weekend, but it always goes by too quickly. Let's take a look at what we got going on today. Right now, we have the composite trading up about 0.94% at 19,397. We have the Dow Jones Industrial off about 0.16% at 44,839. You get that SPY cooking up about 0.21% at 603. You have the dollar staying somewhat elevated at 106.44. Crude oil not doing a whole bunch of anything, trading at 68.06, trading up measly 0.09%. You have gold coming off a little bit today, the embattled kind of gold futures. We're not going to have Tim Ward on tomorrow. We will have him on Thursday, and we'll see what he has to say, at least regarding the miners. You have copper trading up about 0.04% at $4.14. You have silver off about 0.77% at $30.87. You have the Russell sideways right now at 2,445. Disney doing, this is a weird day. You got some stuff selling off for sure. A lot of the mid-cap meme stocks are getting hit brutally. You have Archer coming off, something insane. That is massive volume too. Off about 23.88%, trading right now at $7.28. There's just, you're seeing this thing where not a lot of huge moves are happening in like the mega caps or anything like that, and you're starting to see it trickle down and getting into these kind of unreal meme runs. You're seeing it too with things like Ionic. You're seeing it with things like Qubit. Ionic's off 11.36% today, with Qubit as well, off 10.91% today. What else can we look at? We can look at RCAT. That hasn't been doing too poorly. It might be different. Well, okay, we're off 11.89%. It was staying pretty solid this morning. I don't think this is like the sell-off. I think this is kind of a shakeout. And even seeing into Friday when you had a half day, and I was nervous. I'm always nervous trade around holidays like that, especially when you go into a half day, and it rallied even more. I think you had a high of 1191 in the thing. The volume was decent for a half day for sure. Just in general trading. This thing has earnings December 20th. We can kind of take a look at that a little bit as well. And speaking of earnings, there's some stuff to look forward to. You have Zscaler today, which is really going to be the big one to kind of look at. And I mean that in the sense of just anything that has earnings today. You're a cybersecurity company. You have Salesforce tomorrow. Let's see if anything else. City Trends. Let's see. Then Wednesday we have Royal Bank of Canada. Chewy is huge. Dollar Tree, big. Sentinel 1 on Wednesday, which I'm going to write down so I can look at that a little bit later. I like the cybersecurity market, but it's just, we'll see how it's, really Zscaler I think will be kind of a tastemaker for that. We'll see what happens today with it. Thursday you have Lululemon, massive. You have Kroger coming out, Hewlett-Packard. And speaking of Hewlett-Packard, right? One of the ones that could have competed with MicroStrategies. Excuse me. MicroStrategies is on my mind, and we will talk about them because I'm trying to understand that right now, right? And I think you're buying Bitcoin essentially at a massive premium with MicroStrategy. Maybe it's, liquidity premium. You can't really put Bitcoin in certain funds, but we'll talk some more about that. You have Supermicro. This is the big news. And congrats to all Supermicro bros getting in there. It's going to close that gap for sure. Trading up 29.32% today at $42.22. Let's take a look right here at the 8K they had. They're going to smoke out the CFO. So, all right, announced a special committee of the board of directors. The company had completed its investigation and made several recommendations to the board. including that the company recruit a new CFO. They named him here, David Weigand, and a chief accounting officer effective November 27th. The board has adopted all the special committee's recommendations, including that it would commence a search for those aforementioned positions. The company announced that Kenneth Choing, I would say, I'm going to take a guess on that one, has been appointed as the company's senior vice president, chief accounting officer, effective of November 27th. So pretty good. Shame for Weigand. He'll have to find a new job here. All right, so the evidence reviewed by the special committee does not give rise to any substantial concerns about the integrity of the company's senior management or audit committee or their commitment to ensuring the company's financial statements are materially accurate. With respect to the matters investigated by the special committee, the audit committee demonstrated appropriate independence and generally provided proper oversight. With respect to rehiring of former employees, the tone at the top of the company is appropriate and fully consistent with the commitment to proper financial reporting and legal compliance. Hey, I mean, right on, right? And anyone who had, the risk tolerance to get in at that, I mean, that is impressive for sure, and it certainly paid off. I mean, if you got in at the bottom here, I mean, what a phenomenal gain. $17 all the way up to $42.10. And, I think, Hewlett-Packard, again, the reason I'm bringing this up, not only is it interesting news, but Hewlett-Packard was kind of going to be, at least in some capacity, the one that may have taken over along with Dell from Supermicro if they went out of business, because you can have some cooling rack capabilities with it. And the cooling racks are going to be so unbelievably important going forward, especially as we're hitting a limit with transistors. You're going to need to get software a little bit better in these things. It's going to draw a lot more energy. Yeah, SMCI is doing okay. We'll see what happens. Did they have earnings today? No, that's weird. I don't know why it's saying that. I don't think they released anything today. Give me a second to look that up. No, that's wrong. I think February 3rd is their next earnings. Maybe not. No, we'll see what happens with that. I'm going to take a look at that over the break, and we'll take a look at why I think Thinkorswim is saying that they're reporting earnings after the bell today. In other news of people getting fired from C-suite positions, you have Intel not doing much again. Gelsinger is completely out, which is probably the right move. I think to fumble it this hard, it warrants him getting kicked out, right? And we'll see what happens with that. Let's see. Yeah, stepped down from the company's board of directors. Gelsinger led aggressive efforts to turn around the troubled U.S. company. Yeah, but it didn't work very well. They're going to need to get someone in there, really. I mean, the cost reduction is fine, but I mean, Gelsinger, oversees the destruction of the equity's value here, screws up Raptor Lake, fires 15,000 people, and then just dips out. Yeah. And then gets fired on some random board meeting. I think this is good for Intel, though, depending on who they get. And hopefully they can get someone good who knows how to retain talent as well. Folks, you stay right there. We're going to be right back with Steve Rhodes of Mastering Probability right after this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. Now, every Monday, we are joined by Steve Rhodes. Steve is the author of Mastering Probability newsletter. Again, a fantastic newsletter. Kind of gives you an overview of everything going on in the market. It is a great way to start the week and finish the week as well. Again, if you are a first-time subscriber to Mastering Probability, you can do this risk-free, right? If for whatever reason it doesn't work out, we're betting that it will. But you can get in and we have a 30-day money-back guarantee for all first-time subscribers. I would strongly recommend checking it out because I think you're going to find out it is going to work very well for you. Steve, how are you doing?
Great, Jacob, yourself?
Doing well. Was your Thanksgiving good?
It was, and I saw with my own eyes on Thursday at about noon that Santa arrived. So appropriate for our discussion about the Santa Claus rally.
Absolutely.
And really just kind of a little bit of a focus on the Dow for the folks out there.
Sure.
So why don't we get into it?
I would love to.
And so what I've got up on my screen right now, what we're going to do today is, for the most part, take a look at the bigger picture of the market. But before we do that, in honor of Santa arriving at the Macy's parade on a Thursday and that pouring rain out there, the market typically, and I'll show some seasonal charts out here, but typically speaking, the Santa Claus rally begins towards the end of October. Sometimes it bleeds into November. Traditionally, I think people take a look at the Santa Claus rally as the week of Christmas, but then you would miss out on what typically is the largest rally of the year.
Yep.
So we take a look at doing around that October, November timeframe as we look for some bottoming patterns out here. And I have a daily chart up on my screen. This is the Dow Equity Future Contract. And one of the patterns that I teach subscribers, you hear it all the time, was a pattern that was created by Tom DeMark. And it's called the TD9 count. And now he uses that as a setup for something he refers to as TD combo or TD sequential. But I went ahead and programmed this onto my system and found that it provides us with amazing information. Helps us identify when likely turns are going to take place, where key levels, objective levels of support and resistance are. But in this case here, the actual TD9 count bottom for the Dow Equity Future Contract formed on November 4th. So I will use that as our point of reference. That's when really Santa Claus arrived inside of the markets, at least with regard to the Dow. Now, a couple days ago, this was back on the trading session of November 25th, as we were getting ready for last week. What the Dow Equity Future Contract did was it took out the swing point. The swing point, folks, was a high that formed on November 11th. The market pulled back. Excuse me. Market pulled back for about a week or so out there, and then we've taken off. Once we cleared that swing point, that triggered the A to B equals CD pattern. So there's a small A to B equals CD pattern. I don't have the exact price point, but figure 45,800-ish or so. That does not mean that's where price would stop. And we've been looking for some type of bearish reversal candle to confirm some type of top. So I just wanted to be able to share with people the fact that the Santa Claus rally basically has begun. At least that's what the daily chart is telling us. So since we ended the month on Friday, why don't we go take a look at what the monthly charts are communicating to us?
Fantastic.
And here what I've got for us, Jacob, is I've got 8 different monthly charts. And I'll just simply go through them one at a time here. We'll start with the Dow in the upper left-hand corner. The Dow had formed what I refer to as a Rhodes Momentum Indicator pattern, and it did that in October. It was immediately negated last month when price closed above that high. So the Dow itself, now we're looking at the cash indice versus the equity future contract. It has no top whatsoever. It took out the high that was in there. That suggests that we should continue, that the Santa Claus rally that we just took a look at, that began at the beginning of November out there, it's in full bloom, and we should continue to move higher. The S&P 500 also negated a pattern. It was the TD9 count on a monthly basis. It did that as we came into the end of the month on Friday. It, too, has no topping signals, and longer term suggests that we move higher. The only way that these signals would suggest that we don't move higher is if price were to close below that green squiggly line, what I refer to as the oscillator and change line. That's a natural level of support on any kind of retracement. You can see we're trading above that. When we trade above a green oscillator and change line, it tells us we have a rising price oscillator above zero. Folks, those conditions are just simply bullish, straight out, flat out. NASDAQ 100 negated its TD9 count top last month. The Russell 2000, which has been struggling, rallied right up into resistance. This is one of those lines that's developed with that TD9 count. It helps us to identify an objective level of resistance. That's at 2458. Now, if price is able to close above that on a monthly basis, then it's off to the upside for the Russell as well. The semis are the ones that are really, from a longer-term standpoint, the real fly in the financial ointment. They formed a TD9 count. You can see it was bar number 8 here. And it's basically been a sideways move over the last several months out here, but certainly not moving higher. And the markets would prefer that the semis are out in front leading a rally. They're not. If we take a look at the Dow Transports, they actually confirmed an A to B equals CD pattern to the upside. That should take it back to its all-time high. It was a Rhodes Momentum Indicator top, and that level's at the 18,246.51. This bodes well also for a further rally. The XAU, representing the miners out there, gold miners and so forth, what they did 2 months ago was they ran into resistance. That was a Rhodes Momentum Indicator top at 171.43. What transpired last month is price pulled all the way back to that green oscillator and change line, and that is held. So we've got a consolidation right now inside the XAU on a longer-term basis between support and resistance. And finally, New York Stock Exchange. New York Stock Exchange on Friday negated a TD9 count top, negated a Rhodes Momentum Indicator signal. So we take a look at the majority of these monthly charts. What they're communicating to you and I, Jacob, is that the markets longer term should move higher. I'm not worried about the daily or even the weekly time frames as far as the monthly is concerned, because that's just noise. So that's the message of the November monthly charts. The Dow today, actually, I know we're trading lower in terms of U.S. dollars. However, we made new all-time highs today in terms of euros, Aussie dollars, coronas, and Swiss francs out there. So this is telling us that the market wants to move higher, that we have a global rally that is underway inside of the Dow. This is the Dow's. First, we take a look at the Dow. The vertical line, the horizontal lines out here, the red ones are referred to as horizontal trading ranges. The green lines, they're showing us rising price channels. And then I've got an A to B equals CD pattern. If we come off of the 2020 low out there, the one-to-one price objective of the Dow for an A to B equals CD pattern, Jacob, would take us to about 47,399. We can see at 47,029, that is a horizontal trading range. That's a natural level of resistance out there. And it's not that I'm saying that price will stop there, because this retracement on this B to C leg of this A to B equals CD pattern was only a 44% retracement. That typically results in more than a one-to-one move. If, in fact, that's the case here, this suggests that the Dow will go target the 52,495 level out there. That's the 1 to 1.272 A to B equals CD pattern. This is the Dow's 127-year seasonal cycle. The red vertical line, that represents where we're at today. You can see here, I'd mentioned that typically we see a bottom in the October
we might not have
timeframe.
that chart up. I'm still seeing all of the white backgrounds for the Dow.
Oh, no. Oh, sorry about that. Oh,
no, that's okay.
Man. Yeah, no, sorry about the. Oops. Yeah, that's a little brain fart there. but we'll get it back here now. I'm going to back up real quickly just to run through that. So here are the charts here that show the Dow in basically the major currencies out there. And you'll see, for example, if you take a look at the euro, new all-time high today, 428.22 out there in terms of Aussie dollars and so forth. So the Dow is making new all-time highs today, even though it's not in U.S. dollars. It's doing it in other currencies. Here is that monthly horizontal trading range, vertical A to B equals CD pattern that we've got that gives us a price projection of 47,399, the 1.272 up at the 52,496 level out there. I remember sitting in the office with Tom many years ago, and I went through this longer term chart out there, and what it did was it gave us a price projection of 40,000. There's probably some listeners, Jacob, that were even on listening to that show out there, and amazingly, or not amazingly, we've already made that number, obviously. So if you want, we come back from this break, we can finish this up.
Yeah, Steve, absolutely. Folks, stay right there. We'll be right back with Steve Rhodes after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Steve Rhodes. Steve is the author of the Mastering Probability newsletter. You can find that in the newsletters tab of TFNN.com. He's also the host of the Trader's Edge Show right here on Tiger Financial News Network. You can catch that at 11 a.m. Eastern Time. Steve, before we went to the break, we were looking at potential movements in the Dow through December.
Yeah, well, really, here right now, the chart that we've got, this is a monthly chart, so it's giving us the bigger picture here.
Yep.
Those red vertical lines are what we refer to as horizontal trading ranges. And what's interesting about this is price will typically trade between them, and then it'll either bust one to the upside or the downside, and then you take a look at its next level. So 43,969 was a resistance area. If the Dow pulls back, as an example, look at the Dow's cash indice, that's where I would expect price to find support. Right around, now we don't use it right to the T, but 43,969 is that number. This suggests that we should at least go target the 47,029 level. That's that next horizontal trading range. And if folks were to take a copy of this chart, they would see that the price difference between each of those horizontal lines are the exact same number. Dollar-wise. So you've got that movement. So 47,029 looks like it's in the bag. I had mentioned in that last break that the typical Santa Claus rally actually begins towards the end of October.
Sure.
And this is the 127-year chart for the Dow, so we've got plenty of data to take a look at. And you can see where the Dow typically will go ahead and top out in the early August time frame, move lower in towards the end of October. This year, that bottom pattern that we took a look at inside the Dow, came right around November 1st, 2nd, something like that. So this is why I suggest that the real Santa Claus rally that people should be looking at that typically forms out there is the one that comes in October. I think the retail stores, I went to a wedding in October, kind of late October, and I was shopping for something. Don't go to the retail stores, the big malls too often out there. And when I walked in, I kind of figured that they didn't put out the Christmas stuff until after Thanksgiving. It wasn't even Halloween, right? And they were already showing us the Santa Claus rally. So the retail stores had it figured out that Santa arrived before Halloween out there. But this is the normal pattern that we would take a look at. And December is the second best performing month of the year out here over the last 127 years. Hey, the past doesn't equal the future, but oftentimes it certainly does. Now, what I thought I could do here is shift over to take a look at the Dow and see what its chart patterns look like when we have a Republican president. There's been 19 Republican presidents since they were founded in 1854. Now, my data only goes back to 1897. So I can include 13 of the presidential cycles out there, first term cycles. And this is what that seasonal pattern would look like. Interesting. Now, you don't take this chart here and take a look at it from today going forward. Instead, what I'm providing people, and they want to take a snapshot of this would be as of come January 1st in 2025, so 4 or 5 weeks from now. And this is the typical pattern of a first-term Republican president out there. Yep. If we take that same Republican first-year chart, but I exclude 1929, it looks like this. So if I'll go back and forth, this is with 1929 in it, this without 1929. It's not a substantial difference out here, but this is what we would typically look at. And here, we would take a look at the market basically moving higher into the early May timeframe and then moving lower all the way into the September timeframe. So this would be the typical seasonal cycle. This would show 12 terms because I've taken out the 1929 data on this chart. This is the average annual pattern during World War I. So, and I've got, wait a minute, that's not this chart. Skip that. Sorry about that. When taking a look at, this was a presidential cycle. Well, here's what we can do, though. And I shared this, it might have been last week or the week before, or maybe it was during my show out here. Yeah. But this is the actual monthly chart. Since there's the potential of World War III, I thought we'd take a look at what took place during World War I, what took place during World War II. And so what I've done here is I've taken a look at, again, we're keeping this to a monthly time frame chart. And World War I began on July 29th, 1914, ended November 11th, 1918. We can see here this first red bar off to the left. That was when the war began. The Dow was closed for 5 months. When it opened, it traded lower for basically 2 weeks, and then it was off to the upside. And the off to the upside was because of global capital that was flowing to to the U.S. And that's really what we took a look at when we're looking at how the Dow is trading today. The Dow is trading higher today in euros and a few other currencies out there. It just tells us that global capital is on the shores here inside of the U.S. If we take a look at, this was the so this is a chart here that shows the years of World War II using the Season X data so we can see how the market actually traded. You can see here on average over that time period, it wasn't like it was a market crash or anything. Well, why was that? The reason was because there were global capital flows coming here to the U.S. as well.
Right.
So on this monthly time frame over on the left, we've got when World War II actually started. We've got when Congress in 1941, after Pearl Harbor, the day after Pearl Harbor, declared war on Japan. That's when the U.S. got involved. And we can see here that in this case, what formed the actual bottom back in the 1942 timeframe was a completed A to B equals CD pattern. It was completed because of this bullish reversal candle, bullish engulfing bull sash candle. And then what we see here is the rise in the Dow. And again, this was global capital flowing. Global capital likes to get its way. Well, first, global capital doesn't like taxes. Doesn't like geopolitical stuff, and it hates wars out there. It doesn't like its capital on the ground where boots are at. We didn't have, boots on the ground here other than Pearl Harbor, but there was really no boots on the ground, so to speak. So capital flew or came over through the large cap equities out here. And so that's a synopsis. If I were to summarize this, the first thing that I would say is that last month, on Friday, we negated a bunch of topping patterns on the monthly time frame chart. The Dow, the S&P, the NASDAQ 100, with the Russell hitting a resistance level. That bodes well for a future rally out there. Yep. And I would surmise that where the Dow is headed to is at least the 47,399 level. Now, folks, that is a monthly chart. There's going to be a lot of noise up and down during the way out here. But at least at this stage of the game, that's what my charts are communicating to us.
Fantastic. Steve, great insights as always. I love how you're able to pull things from kind of history and apply it to what we're going through today. Obviously, that is a great thing. We'll look forward to seeing you tomorrow, 11 a.m. Eastern time for your show, Trader's Edge.
Sounds great. Thanks, Jacob. Have a magical Monday.
You too, Steve. Thank you so much. And folks, if you want to get some more of that, really strongly recommend checking out Mastering Probability newsletter and checking out Steve's show at 11 a.m. right here on Tiger Financial News Network. And seriously, great point, right? In saying a lot of this stuff is moving so parabolic, right? I could see some kind of pullback, but you don't want to do this during December. I mean, you're seeing the charts historically, kind of occurring. You get the Santa rally. I think this stuff gets pushed in to December, and we keep going up. You have some shakeout today. Obviously we have to wait and see what kind of happens tomorrow with that to set the tone for the rest of the week. But as much as I want to be short at some point, maybe around the presidential inauguration, I don't want to do it now. We'll talk some more about that. Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. I was just joined by Steve Rhodes. Steve is the author of Mastering Probability newsletter. He's also the host of the Trader's Edge right here on TFNN on YouTube and Discord right at 11 a.m. Eastern Time. Make sure you check him out during that time. He does accept... you give him a ticker, he'll take a look at it and kind of do a quick chart analysis on it. Very much worth the time if you have not visited him during that hour. Take a look right now at Vuzix Corp. You rallied about 28% earlier in the day today, okay? Trading up only 7.35% right now. I'm going to move this to the daily. You can kind of see what just happened, right? So some big volume to the upside today. We cracked it, had a few, 15-minute time intervals right here where you're at 260, and then we cracked down and we're kind of approaching where we were at this morning. If you look at it kind of on bigger time frames to see what's going on, you might be getting some, some kind of profit taking here. I get worried this is like a shooting star kind of. We have to wait tomorrow to see what kind of price action is. I'm kind of an opinion today is we're just seeing some shaking out and, kind of profit taking in some of these small cap or mid cap stocks that have gone parabolic over the past few weeks. What does Vuzi do? Vuzi makes basically AR glasses, right? And if you've listened to me at all, ever talk about this stuff on the show, what I think one of the greatest appeals really to AR glasses is their utilization in things like healthcare, in industry, and military, right? So Vuzix, today you have this rally going on that OSHA is expanding the deployment of the Vuzix M400 smart glasses. What's kind of neat about these is they have a zoom integration as well. So, your OSHA inspectors can kind of wear these things and they can connect to someone via a call on it. This apparently has a lot of utility for OSHA. Of course, they're expanding the deployment of it. And then additionally, they signed a contract with a defense contractor kind of for waveguides, which is massive as well. Undisclosed amount. Okay, six-figure production order. You'd like to see it higher, but we don't even know the exact amounts or who it even was in any capacity. Obviously, OSHA is a nice thing to have, but these guys kind of have problems, I think, right? I'm hoping this information really does boost orders to some meaningful degree, because I'm going to pull up, give me a second here. I thought I had this, but I'm going to pull up their financial report, right, from last quarter. And you're going to see some issues with it, like right off the bat. Let me see here. This is the 10K. Okay, so this is quarter ending September 30th, Q3 24. Look, I mean, they're having like contracting sales and engineering services in a major way. And this is just because there's less demand for whatever reason for their product. Now, their inputs has gotten way better. So revenue compared to cost of goods sold has improved considerably, but they're not selling as much. They spent less on selling and marketing. They spent basically about equal in general and administrative. It seems like they are to kind of shore up some more cash. It seems like they're offering some kind of plan for their employees to forego salary in order to get some shares. That's decent, right? I mean, someone could argue that that's somewhat bullish, but you still get a gross profit loss here of about 19% comparatively. It's tough. Okay, total cost of sales, that is nicer, right? But the total sales is way less, and that is a little bit worrying, right? I also am suspect of the AR glasses consumer market. Now, Meta did exceptionally well with it, right? Let's see here. This is from September 24th. They sold about 700,000 units. This is with Ray-Ban. And they are cool. I wore them in, oh, good Lord, what is it? Best Buy a little while ago just to see what it's like. And it's cool. I mean, it's not something I would ever buy. But there's plenty of like techie people out there who find this kind of interesting. And at least in the case of Vuzix, you're having it, at least the tech itself being applied to military purposes. And then you do have the actual wearable glasses being applied in a regulatory kind of field, which is nice. But this just makes me a little bit nervous. And so we'll see what kind of happens with their 10K. And if for whatever reason these 3 months are kind of just not great, but you're still seeing, similar contraction in the quarters prior. And they don't really mention it too much beyond, the decrease was a result of 28% decrease in smart glass product sales and a 51% decrease in engineering services. And they kind of just don't talk about it. And they're getting into a period where they're just trying to get more money by doing some kind of cost cuttings as opposed to, driving to sell more of these things. And, again, hopefully you can kind of rely on things like OSHA contracts and military contracts. But in reality, I mean, we saw with Palantir, right, that we're getting military contracts. That's nice. I mean, it creates a floor, right? I mean, you get predictable cash flow for, however long that contract is, but you really get the massive takeoff when you see things get adopted on an enterprise level. And you're just not seeing that right now with Vuzi. And, we'll see what happens. I mean, again, this is massive run up. This wick is huge, $3 right now, right? Trading all the way right now at $246. You were up 28% this morning, only up 6.55% right now. This might just be some profit taking, and tomorrow people say, hey, you know what? Actually, no, I think these sales are good enough to kind of put them right back on track. But as far as the third quarter is concerned with sales and engineering services, I mean, these are massive contractions, right? As I said, 28% and roughly a 55% respectively, 51%, excuse me. So that's Vuzix for right now. Again, nice pump forward today. There's the potential that this, if you get into it, you might be a bag holder at these levels, which is fine. Seems like they have decent technology. I think there are other competitors in there that might use things like semiconductors in it that Vuzi does not do. So that could be, some kind of competition for them going forward. But as it stands now, great bid on the OSHA contract and then whatever that shadowy defense contractor was. And what is it going to be? Is it going to be HUD displays for vehicles? Is it going to be HUD displays for goggles on soldiers? I mean, I think that's the next force multiplier, right? Like teching out all the soldiers to some certain extent. We talk a little bit about, I don't have much to say on Red Cat right now, besides it's off 12.83%, still in this kind of realm. This is another weird company in the sense that they're getting government bids for what they do, which is fantastic. But I don't see how it applies, in a major sense in the enterprise way, right? Meaning that their teal drones are fantastic and the military wants them. And there's no doubt we're going to build out that kind of platform system going forward. I mean, we've seen how effective it was in Ukraine, right? And we spoke last week as well why RCAT is getting the bid now as opposed to Skydio. They don't communicate with GPS for some certain period of time. They have a mapping of the area they're in that prevents them from getting jammed the way that Skydio was getting jammed. Ukrainians started going for Chinese-made drones. Not really what you want if you're a NATO funder. And so that's Red Cat Holdings right now. They have earnings coming on December 20th. So they really need to impress at $790 million market cap as it stands. So right there, folks. We'll be right back. I got some more to talk about.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. Jacob Shoup, you're watching the Tom O'Brien Show. We have a short segment before the end of the show. Take a look right now at MicroStrategy, off about 1.77% today at 380.62, an all-time high of 543 just a little while ago, with the Bitcoin rally trading all the way back down there. This guy's running a racket in a hilarious way. You have basically convertible bonds, okay, at 0% yield for 55% coupon. He's using all those funds to go ahead and just buy more and more Bitcoin. And from what I kind of looked up, he has 402,100 Bitcoin right now. After doing some math here, I'm not sure what makes it worth this price, okay? Besides, what I don't understand is why would you just not buy Bitcoin, okay? If you want to put it in maybe like a Roth or something like that, okay, I can understand that. But if you take all the Bitcoin compared to the shares outstanding for MicroStrategy, you get about like 18/1000th of a Bitcoin for every share. So roughly like $170 in Bitcoin per share. So you're paying a massive premium just to buy Bitcoin, when you could just buy $171 worth of Bitcoin, or you could buy, $300 worth of Bitcoin instead of paying $380 for $170. I maybe don't necessarily get it. And you're at 775 billion here versus 21.91 billion in Bitcoin. Yeah, I mean, I think for me, I'm like would stay a purist on it, right? And if I'm missing something, someone tell me here, because I don't see necessarily the point besides just like, you know, you're paying a massive liquidity premium or whatever you can put inside, you know, some kind of portfolio that wouldn't accept Bitcoin. Or you just, you know, it can also be a case like where everyone's dad hears about Bitcoin at Thanksgiving and they're like, I don't know how to do that. I'm just going to buy MicroStrategy, which is totally valid. But all else staying equal, you need Bitcoin to nearly double to get it, you know, a share, a Bitcoin per share worth. Anyways, thanks for joining me, guys. I'll be back with you tomorrow, Tuesday. Basil Chapman will be joined by Tommy O'Brien, 9 a.m. tomorrow morning. Take care.
Building